Good evening, finance experts. This is David Boynes and John Regard's Fin653 presentation. We're going to be analyzing 15 different companies within 3 different industries.
So we chose 3 different industries. We chose the automobile, airliners, and defense industry. Amongst the automobile, we have Toyota, Ford, Honda, Nissan, Mercedes-Benz. The airliners industry, we have JetBlue, Southwest, American, United, and Delta Airlines. In the defense industry, we have General Dynamics, RTX, Textron, Boeing, and Lockheed Martin.
We're now going to compare the automobile industry companies against each other. What's going on in the automobile industry? The automobile companies are spending more on innovation to compete with the growing market for electric vehicles. According to CNN Business, companies will start investing billions every year to develop better technology for electric vehicles. Even after major setbacks and supply chain issues, sales, and manufacturing during the COVID-19 pandemic, the automobile industry is growing at a positive rate through 2023.
So in 2023, the major automobile companies like Ford, General Motors, and Stellantis are facing major labor strikes from the United Automobile Workers Union, and the strike could greatly affect the industry, especially kind of leaking into other companies amongst that industries like the ones that we're talking about today. And then also the automobile industry is shifting their focus towards producing and investing more money into autonomous vehicles, self-driving vehicles. According to Autodesk.com, countries like Germany and China are funding projects for developing autonomous vehicles.
So in terms of the short-term solvency ratios, we're going to break down each individual company of the industry. For Toyota, we have the quick, current, and cash ratios for each. And the cash ratio stayed about the same, the quick ratio stayed about the same, and the current ratio stayed the same. In terms of Ford's short-term solvency, we have a small jump from 2019 to 2020 up, a slow increase from 2020 to 2021, and a slight decline since then. And then for current and quick ratio, they stay about the same ever since 2019. And then 2019 for Mercedes-Benz had a slight increase up until 2021 and a slight decrease ever since. And the current and quick ratios stayed about the same.
And when we're talking about these industries, we are comparing them on a 5-year scale. So it's 2019 through 2023. So I have Honda and Nissan here, and they stay relatively consistent amongst those 5 years. In 2019, you start to have a 3-year stagnation for the quick ratio, current ratio, and cash ratio for Honda, with a quick increase in the 2021-2022 years. We think that's probably because of people starting to buy more vehicles once travel restrictions are kind of lifting from COVID-19. And then Nissan is the same way. They have the same basic pattern. 2019, their quick and current ratio are relatively high, with a quick dip and then back to a rise with stagnation. And their quick ratio is relatively low for their 5 years of their cash ratio.
So now we're going to be comparing the quick, current, and cash ratios against each other side by side. So we have Toyota, Mercedes-Benz, Nissan, Honda, and Ford. Nissan started in 2019 with a slight dip. They were the leader before the pandemic hit. And then ever since, they've been slowly increasing back to even higher than pre-pandemic numbers. And all 4 other companies stayed about the same, so there's really no reason to go into those in too much detail. Same story for Nissan. They started the highest and went down the most during the pandemic, and the other 4 stayed about the same during 2019 to 2020. And pretty much all of the companies except for Nissan and Honda have stayed about the same since 2020, but Nissan and Honda have slowly increased ever since. In terms of cash ratio, Nissan was the lowest, which is contrary to the other 2 ratios, and slowly increased in 2020, 2021, 22, and 23. All others generally increase into 21, but we had a slight dip down in Ford's from 2021 to 22, and a significant increase, I'd say, for Honda from 21 to 22, and then all five seem to have kind of stagnated from 22 to 23.
And then we're looking at the long-term solvency for the automobile industry. We have the total debt ratio, the debt to equity, and the equity multiplier. So the total debt ratio, we have Ford at the very tippy top, and then we have Mercedes-Benz, Nissan, and then Toyota, and then Honda. And then going to the automobile debt to equity ratio, Ford, I do have a laser, but it's not working that well. Ford is at the very top. When the pandemic hit, they had a drastic decrease and stayed stagnant. And Mercedes-Benz, Nissan, Toyota, and Honda basically all stayed in the same relevant pattern for the 5-year span. One of the most important things we like to look at is the equity multiplier. For the equity multiplier, Ford is by far the highest, and you don't really necessarily want a high equity multiplier. You want to stay as low as possible. And the two ones we really like the most is Toyota and Honda, because they're the lowest, but they're stagnant through the 5-year span, even through the COVID-19 pandemic.
Now, when we look at long-term solvency ratios, pre-pandemic, Toyota and Honda were by far the leaders. Ford was by far at the bottom and still ended in 23 at the bottom. I would say that Honda and Toyota had the biggest decreases into the pandemic year in 2020. And Mercedes-Benz has steadily increased through 2019 and 2023. I would say because it's more of a luxury brand and they're generally going to have a higher price point than the other ones. But in terms of consistency, I would say that Toyota has the best tier ratio, or Honda. And whenever it comes to cash coverage, I would say that Toyota has by far the best. They're statistically the highest on average, and almost every company except for Mercedes had a slight or drastic dip in 2020 from 2019. And ever since then, they've kind of either stagnated or gone up and down a little bit, but it's nothing to get into too much.
So looking at the profitability ratios of the automobile industry, for the profit margin, you do have Mercedes-Benz at the top because, like I said, it is a luxury car brand. You are going to have a high profit margin for them. One thing I really like to look at is how Toyota stays pretty consistent even through the pandemic years. And then you have Honda, which stays pretty consistent but lower than Toyota, and you have Nissan at the very bottom. You have the automobile ROA, and the ROA, Mercedes-Benz is at the top, but like I said, you're not going to sell as many of those luxury vehicles as you are as Toyota. Toyota stays very consistent throughout the 5-year span. The same thing with Nissan, not the same thing with Nissan, I'm sorry, excuse me, same thing with Honda. They stay consistent through the 5-year span, but they are a little bit lower than Toyota. Nissan takes a drastic dip during the 2020 year because of the pandemic. And then ROE, you have Mercedes-Benz at the top, but you have Toyota once again, which we like to see, is staying consistent throughout all these years, especially in such a economic downfall the world has saw during the 2019, 2022, 2020, and 2021 years.
In terms of total asset turnover, this can be just people having better managers than each other, so we don't want to look into it too much, but Honda has consistently the highest, while all the other companies generally had a smaller dip in 2019 to 2020 and a slow increase or stagnation through 23.
So looking at the market value for this company is, look at the PE ratio right here. Mercedes-Benz did take a drastic dip, but once again, we're looking at this again. Toyota stays consistent across the 5-year span. It's something we like to see. Ford did, in 2019, 2020, did have a off year, but they slowly rose and then started to decline again. Looking at the automobile market to book ratio, Ford is at the top, but we see Toyota again. Toyota is relatively staying stagnant, consistent through the 5 years. Mercedes-Benz is having basically the same thing as Toyota. Honda and Nissan are lower on this chart. And then we have the enterprise value, which is something we like to look at as well. Toyota by far has the highest enterprise value. because we'll talk a little more in a little bit, that they are the most popular car brand in the world. Honda stays consistent, Mercedes-Benz stays consistent, Ford had a jump up in 2021, and then Nissan did not report the enterprise value for these years. And then you have the EVA, Mercedes-Benz. I like to talk about Mercedes-Benz. Mercedes-Benz had a drastic jump during the pandemic. Toyota had a little downfall during the pandemic, but when 2022 came, they skyrocketed up, and Ford and Honda and Nissan stayed consistent.
So when we look at the supply chain for the industry, the automobile industry's buyers are well diversified and justify little to no concern for the industry. The automobile industry suppliers are concentrated under their own factories for the most part, but they don't solely rely on their specific factories and have diversified quite well. So a lot of these automobile companies have their own manufacturing sites where they make their own parts, so they don't have to rely on an external supplier. But if something were to happen to one of those manufacturing sites, they still have other options as well.
So what we think is the best company, we think Toyota is the best company amongst these five. Toyota is by far the world's most popular automobile company, selling over 10.2 million vehicles in 2022 alone, and that's after the pandemic, which is incredible numbers. Toyota leads or was consistent in pretty much every category we talked about to describe the industry. Equity multiplier, EVA, market value, and also Toyota recovered relatively fast amongst all these companies we talked about during the pandemic.
And Toyota also has the aforementioned manufacturing sites that we had alluded to earlier in the presentation.
So we had some technical difficulties with our camera. We switched to a different camera. That's why the angle's a little different, but we're going to move on with the presentation.
Now we're going to go through the defense industry. What's going on within the defense industry? Countries around the world are spending more on their country's militaries and investing in new technologies through defense companies. The United States alone spent $876.94 billion in 2022. Countries contract different defense companies to innovate current and new technology that might be used in future conflicts. Defense companies spend billions on innovating such new technologies.
So with recent conflicts erupting in the world, like the Ukraine-Russian war, the conflicts in the Middle East like Syria, Iraq, Afghanistan, and the most recent Israel-Hamas war, and the war that's happening in Myanmar, and the many civil wars happening around the world, defense contracts are at an all-time high, while the UN and other allies are spending money to give to their allies. Defense industry continues to grow at a positive rate.
So in terms of the short-term solvency ratios for all of our companies within our industry, we're going to start with the quick ratio, current ratio, and cash ratio, just like the previous, and it's going to be the same from here on out. Short-term solvency, our current ratio is pretty high for General Dynamics, steady increase from 19 to 23, steady decrease for short-term solvency of the current ratio for RTX from 2019 to 2023, and kind of I would say a bell curve for 2019 to 2023 for Textron. Quick ratio for General Dynamics was a slight uptick in 2019 and 2020. Same with its cash ratio. Exact same situation for Textron and exact same thing for RTX. And then slight decrease or stagnation for all three since then for the cash and quick ratios.
So continuing with the short-term solvency, we're going to look at Boeing and Lockheed Martin. Boeing, they're having a little interesting graph here. The current ratio is a lot higher than their cash and quick ratio. The quick and cash ratio are basically the same, maintaining the same congruent pattern through the 5 years. And then Lockheed Martin kind of has a similar kind of pattern, the same thing as Boeing. The quick and cash ratio are relatively low, maintaining the same pattern, while the current ratio is a lot higher.
Now in terms of the quick, current, and cash ratios against each other within the industry, you're going to see that Textron had by far the highest quick ratio of all 5 companies, while all the other ones had a slight uptick in 2019 and 2020 and slight stagnation or decrease through 2023. You're going to see the exact same thing for the other two ratios, the cash and current. So we really won't need to get into that too much. They're pretty much identical.
All right, so the defense industry for long-term solvency. For the total debt ratio, we have a Boeing with a slight increase in 2019 because they were building lots of debt, because they don't just do defense industry stuff, they sell airplanes to the airliners, and we know that COVID-19 greatly affected the airline industry. RTX, Textron, Lockheed Martin, and General Dynamics basically had the same pattern through the 5 years that were through 2019 and 2023, the years that we're describing. The debt to equity ratio for the defense industry is a little interesting. Lockheed Martin was extremely high up there, and then during kind of the pandemic, they took a nosedive in this category, with the rest of the industry kind of staying around the same points. Then the defense and equity multiplier. This is something I wanted to point out as well. You have General Dynamics, the light blue. I'm sorry, not the light blue, the dark blue. Lockheed Martin does have a high equity multiplier, but they by far make the most money in the industry. So they can have a little debt in their industry as long as they make up for it, which we'll get to in a little bit.
So in terms of long-term solvency ratios, as you can see here, this final segment from 2022 to 23 for General Dynamics is missing. That's because it was unreported. So that's why it's missing, just in case somebody was wondering. But the four companies in 2019 and 2020 that decreased were RTX, General Dynamics, Boeing, and Textron, while Lockheed Martin remained steady on a slight increase through 2021. The four others that are not Lockheed Martin also had a slight increase from 2020 to 21, and then all five kind of stagnated to 22, and then into 23, the four that remain, I would say Textron did the best. They had the biggest uptick, and then Boeing kind of stagnated, and RTX and Textron both increased.
And we do expect to see a lot of these industries to kind of go on an upward slope as conflicts around the globe do kind of continue, and we'll talk about them more in a little bit. But the profitability of the defense industry. So for the profit margin, we have General Dynamics and Lockheed Martin at the very, very top. Lockheed Martin kind of having a slight edge over General Dynamics. You have Textron kind of staying with the top pack as well, at the very top. You have RTX and Boeing taking a dip in 2020. So to talk about it, we kind of mentioned it already. Boeing does sell airplanes to airline industries, and who took the biggest hit during COVID-19 was the airline industry. So Boeing took a dip as well because they couldn't sell their assets to the industry buyers that they have. And RTX also sells airplanes, but not as much as Boeing. So the ROA, you have Lockheed Martin by far the top of the pack with General Dynamics and Textron and RTX, and a close follow-up. And then Boeing, like we said, they had the dip in 2020, but they're going to recover from that because Boeing supplies a lot of the airplanes in the airplane industry. So the ROE, Boeing by far was extremely high pre-pandemic, but like we said, when the pandemic happened, they had a decline and they've been kind of stagnant since then. Lockheed Martin in 2019, they had a major uptick during the pandemic, because we're going to talk about this in a little bit, that COVID-19 didn't affect the defense industry.
So in terms of the total asset turnover for the industry, we're going to love the managers at Lockheed Martin. They're consistently the best by far, slowly followed by Textron and General Dynamics, and then the bottom tier, I would say, is RTX and Boeing.
So talking about the market value of the defense industry, the PE ratio, you have RTX at a slight increase from 2019 to 2020, but they have a major decrease going into 2021. One thing we like to look at when we look at these graphs is a company being consistent. One company being consistent would be General Dynamics and Lockheed Martin, two companies we really like looking at here. Boeing, like we said, Boeing had a major decrease within these years, so they kind of didn't report in these years. We'll talk about it more in a second. Then you have the market to book ratio. Lockheed Martin by far is worth more to market to book. They're on the top. And then you have Boeing, and then General Dynamics, RTX, and Textron are staying consistent. The enterprise value, you have RTX at the very top, and then right next to it, Lockheed Martin. Then General Dynamics and Textron and Boeing staying at the bottom of the pack. Then you have the EVA ratio, which is Lockheed Martin, of course, at the top. We're going to hear us say Lockheed Martin a lot. And they're above, they're actually positive on the EVA graph. General Dynamics and Textron, they're right at zero, if not above. RTX and Boeing are negative on this chart.
So the supply chain for the airline industry, our 5 companies, the industry's main buyers by far is the United States government. This raises extreme concern if there were a major political shift in the direction of lessening defense spending. These companies would lose millions, if not billions of dollars. So let's just say a new president would be elected or some kind of new system would be in our government, and they completely shifted defense spending to all sorts of other spending, and it would just be awful for the airline industry because of this.
Defense industry.
The main suppliers for our companies are generally diversified except for RTX, Lockheed Martin, and Boeing. Each of these companies has one to three suppliers who rely on them for an extreme portion of their revenues.
One fun fact I wanted to say is what we were saying was that there's a major political shift in the United States or any country. Just 1% could, like a 1% less spending in any government, like let's say for example, the United States, 1% is going to be millions of dollars, which is kind of insane to think about.
So which company do we like the most? We both agree that Lockheed Martin was consistently better than the other companies in the industry, especially whenever we look at their ROA, TAT, ROE ratios, and cash coverage, and even more than that. We expect Lockheed Martin's success to continue and grow because Lockheed has numerous contracts with countries around the world worth billions of dollars developing weapons and armory for their respective nations. And like we also aforementioned, conflicts in the world rising. Seems like each and every day we're hearing about another new thing. So these defense contracts are going to just continue to be bought up by different countries.
And they're not just also buying more contracts because of war. They want to stay ahead of the game and get the best, most innovative armory or weapons needed. All right, so our next and last industry is going to be the airline industry.
What's going on in the airline industry? Airlines are slowly growing to pre-pandemic numbers. The COVID-19 pandemic put a huge strain on the airline industry and really crippled a lot of them. With new technology such as AI, with unlimited possibilities, airline companies are spending millions in innovation to separate themselves from the competition and slingshot themselves back to pre-pandemic numbers and even further.
So airliners in the United States and abroad are seeing a major uptick in travelers due to the COVID-19 pandemic. Pandemic's over with, people want to start traveling again, so those numbers are going to start to rise again. So according to TravelerWeekly.com, shortages could hurt the industry, pilot shortages could hurt the industry, as a whole. North American industries are around 14,000 pilots short. This could lead to major delays and loss of money for many airliners. For example, I traveled in Europe not so long ago, and there was a major pilot and security shortage. It delayed our flight about 10 hours. People just decided to decline their flight and to get their money back.
So let's look at the short-term solvency ratios for the airline industry. We're going to start with JetBlue, Southwest, and American. So 2019 and 2020, we can see that all three ratios jumped up very significantly for JetBlue, increased slightly for American, and increased very significantly for Southwest. 2020 to 2021 for American was the only company that increased into 2021. JetBlue and Southwest either stagnated in Southwest's case or decreased in JetBlue's case. And in all three, we can see a steady decline from 2021 and 2022, and a stagnation for JetBlue, American, and a Southwest decline into 2023.
So continuing on the short-term solvency, we have United and Delta. United, basically the same as JetBlue, Southwest, and American. you have that slight increase in 2019 because travel was doing relatively well in 2019 until towards the end, and then let's say November, December, maybe October a little bit, once the word of the COVID-19 pandemic was starting to get out. 2020, you have a stagnant, kind of stagnant pattern, and then it makes a decline. It's the same thing with Delta. Delta has an incline and the start of 2019, and once 2020 happens, there's a steep decline.
So let's look at the quick, current, and cash ratios against each other within the airline industry. We're going to have all 5 companies against each other yet again. So as we can see with the quick ratio, Southwest had by far the highest throughout each and every year. The other companies such as JetBlue and United were kind of around the same up until 2021, where I would say United kind of fizzled out, and then JetBlue had a steady decline, and Delta had a slight increase into 2020 and a steady decline ever since into 23, and American has been stagnant ever since. Current ratio, same story. Southwest at the top, all the other ones following pretty much the same pattern. Cash ratio, same thing. We're not going to get into that.
So the long-term solvency of the airline industry. So the total debt ratio for the airline industry, you have American Airlines at the very, very top with a close following on United and then Delta. One thing I like to point out is that American, United, and Delta are considered like the luxury airliners. So you're going to see a little bit more increase and decreases in those. Then you have Southwest and JetBlue. Then the debt to equity ratio, you have Delta with a very, very high increase and then a steep decrease. Like I said, they're considered one of the luxury airliners. Theirs is going to be definitely different from most. The equity multiplier is something we like to look at. Like we said in the past too, Delta has a very large equity multiplier. Same thing with United. Southwest is not super high, it is low. It's kind of the same as JetBlue. And then American did not report for the last 5 years. And we're thinking that's because there was a major, not buyout, but what's the word for it again?
Bailout,
not buyout, bailout for American during the COVID-19 pandemic.
So let's look at the long-term solvency ratios for each company. As you can see, absolute shambles from 2019 to 2020. Significant decrease for every single company. Every company kind of bounced back in 2021 compared to 2020. And it's been a slow and steady increase for a couple of companies and a stagnation for the other couple. And then same deal with the cash coverage ratio, significant decrease with a slight increase in stagnation.
There's one thing we want to point out is that Southwest is at the very top of each one.
That is correct.
They are the most superior in both categories. Even though the patterns look the same, Southwest has that slight advantage on the other airliners. So airline industry profitability, we're starting to see a pattern with the airline industry. A lot of these graphs are looking the same. It's because they all went through the same thing. They all had these same negative effects through the pandemic. So let's look at the profit margin. The profit margin of the airline industry, you have Delta that took the big nosedive because, like I said, luxury. They need to have, it's a lot of, I guess we say fixed costs for them to basically keep that upkeep. But one thing I want to point out that Southwest kept their profit margin relatively high, even with the huge dip they had. And the same thing with ROA. The ROA is the same thing. Southwest affected just as much as everybody else. They entered the negatives, but they were the first ones to get out of the negatives back into the positive ROA. And then same thing with the ROE. Everybody entered the negative ROE because there was no one flying during the pandemic. But Southwest, if you notice the dip, let's go not Southwest, we'll go to Delta. Delta and United by far affected the most by this, the ROE. But Southwest and JetBlue were the ones that made the quickest return during the pandemic.
So in terms of your total asset turnover, pretty much every company is about the same, but as you can see, pre-pandemic levels, Southwest is yet again on top, and they're kind of consistently going up with everybody else after 2020. That's really it for total asset turnover. There's really not much that they could have done with the pandemic, and everybody's just kind of slowly recovering.
Yep, slowly recovering, but they're making that positive impact back. So the market value ratios, we have the PE ratio, and these ratios are going to be a little interesting to look at. So obviously, pandemic, 2019, you're going to have a drastic drop going into 2020. 2020 and 2021, you're not going to really have much to report on. And then once traveling and travel restrictions went away in 2021, they weren't fully away just yet, but they were coming back. You see this giant increase with a lot of these airline companies like Southwest, American, United, and Delta. Then market the book. Delta is a huge luxury airline. Their value is going to be a lot higher, but the rest of the companies stayed relatively stagnant, not stagnant, but consistent through the 5-year span. The enterprise value, like we said before, you have American, Delta, and United. They're going to be a little bit higher on there because they're considered a luxury airliners, and then Southwest and JetBlue coming in at the bottom, and then airlines EVA. It's kind of the same thing as the ROA and the ROE graphs. We see this major dip in 2020, but the one thing I want to point out, JetBlue and Southwest are the ones that stay consistent, trying to get back once travel restrictions were opening back up.
So supply chain for the airline industry, the buyers of the airline industry are the normal consumer. For example, me or you. If the airline industry lost David and I as their customers, they're not going to lose sleep over it. They have so many people that have to buy tickets from them that one or two isn't going to make the biggest difference. The airline industry suppliers are also extremely diversified and raise little to no concern about the industry's future. There's just so much diversification within their portfolio, quote unquote, that there's no issue. If one company would go down, they have plenty of options.
There is one or two things I do want to touch on this one. For example, we're talking about the suppliers of the airliners. One big thing is you have Boeing and Airbus. Those are two major suppliers because they sell the planes to these airliners. If those two companies went under, there's no one really to step in just yet to sell these airplanes like the Boeing 737 and the Airbus airplane to these companies. So it would hurt the industry drastically. And I did want to point out that November 26 was the highest rating air travel in the history of the world or something like that. The most people traveled on that date in history. So that's pretty interesting as well. That means the airline industry is coming back.
Very good. And so which company do we think is the best? Compared to the other industries we analyze, the airline industry was by far the trickiest because of COVID-19 and the implications that brought. But we would say that Southwest is the best because the consistency in all of their categories, specifically when talking about ROA and profit margin, due to having such a fluctuation with all of the airline industry statistics, Southwest was just the king of consistency, and in these times, right after a pandemic, consistency is key.
So overall, the best company we thought was Lockheed Martin. We believe that Lockheed Martin is overall the best company with the most room for potential growth. Now, they are a massive company, but there's so much more they can do within their company. With conflicts growing and continuing on a global scale, we believe that Lockheed Martin will be able to obtain more contracts from countries to continue to make profit. So I was doing some research the other day, and I saw that Lockheed Martin just signed like a multi-billion-dollar deal with multiple countries to develop and make better armory and weapons for those countries. Kind of staying ahead of the game, innovating is the best key to this. And other factors, this is a big factor in my opinion. Economic downfalls do not technically affect the defense industry. Countries have to spend money on defense, and for example, that's like the COVID-19 pandemic. The pandemic happened, defense spending really didn't drop that much, if not at all. We appreciate you watching.
Thank you for participating during our presentation.
All right, finance experts.